Thanks to our friends at the Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. In many ways, Enphase Energy has been a confounding stock. This is a company that's components manufacturer in the renewable energy space, but it has been a massive, massive winner. And it's got $1.6 billion in cash just sitting there on its balance sheet. Say what you want about the valuation, but you got to ask yourself, is this a company that's positioned to use that $1.6 billion to supercharge its growth? I'm Jason Hall. We're going to talk about that here on The Smattering. I've got Tyler Crow here with me to talk about it. Hey, Tyler.
Jason, I'm so glad we're talking about this because I feel like it's this and other of its competitors is just like a sector where like, how did this happen?
I was lucky enough, and I'm not sure, I think you may have owned, at some point you may have owned SolarEdge, its peer kind of competitor in the space, but I did. I've owned both and was fortunate to buy. I'll be honest, I got pretty lucky with the timing, but the stocks have become so hard to, by basically every objective measure. These are extremely expensive stocks, but the businesses have been able to continue to defy expectations and deliver wonderful growth and results. And you have to ask yourself, if they've proven they can do it, if Enphase has continued to prove it can do it, they've got the resources right now to continue to grow, right?
Enphase, and as you mentioned, SolarEdge Technologies. Yes, I still own solar energy, a high growth business, but a commoditized business that has been quickly moving down the commodity price scale. And yet both Enphase and SolarEdge, to a degree, have been able to basically maintain pricing power for what is kind of a middleman component manufacturer.
Here's their 5-year returns. We're talking about, 6,000%. That's turning a dollar into $72, right? Basically, that's what Enphase has done over the past 5 years. And SolarEdge, a 6-fold increase in value. It's been remarkable that they've done that.
Only a 6-fold increase over a few years, but it's what's miraculous about it is they're a commoditized component for the most part, but have somehow been able to maintain strong margins in a rapidly growing commoditized business that requires a lot of investment to keep up with that growth.
It's actually steadily increased its operating margins, even as the environment has continued to become more competitive.
Enphase, in particular, SolarEdge to a slightly lesser degree, they've defied what would normally happen for a commoditized component manufacturer. It's fascinating. And they are businesses that have been able to reinvest in their businesses while still building cash. As you mentioned at the top, Enphase has about $1.6 billion in cash and just sitting on the books right now. SolarEdge Technologies has a similar amount of cash just kind of sitting on the books, cash that they are generating. And to me, it's so hard to figure out what to do with these companies as an investment because you look at the financials and you go, wow, these companies are growing. They're cash generative. They're throwing off free cash flow. Everything else in the solar industry is just spending every dollar available.
Cyclical. It's a race to the bottom. It's challenging. The space is becoming more mature, so the growth rates are slowing. All of those things, these two companies have generally kind of defied that gravity.
And so because of that, you look at it and go, yeah, these businesses look great as far as like, I want to invest in these businesses. And then you look at the stocks and go, holy cow, do I want to invest in something that's that richly valued? And that's where it starts to get really puzzling. SolarEdge trades for a trailing 12-month PE of 186.
Because of the volatility of those stocks, the numbers are actually a little bit higher. It's more like 76 times and 192 times at this very moment in time that we're recording this video. The point is, by any objective measure, that's high. That's rich.
The one place in the solar industry that we've been watching this industry for years, and it seems to be the only one that has been able to continually not just grow the business, but grow profitably. And as a result, you're like, well, if I want to be invested in solar, this is a place I want to be. But then you look at the stocks and go, holy cow, how can I justify investing at a valuation like that?
Take all of that and put it together, Tyler. And I think the best takeaway for me, and maybe this is the way a lot of investors should be thinking about it, is be very conscious of the fact that you're going to be paying an ultra high premium for the business. in an area that, broadly speaking, generally you pay a discount for these sorts of businesses in other industries. So there's the risk that at some point, what Enphase has been able to do doesn't continue to work. So keep that in mind and maybe tiptoe into this one and look for opportunities to build out a position over time. If it keeps doing well, but the market for some reason gives you an opportunity to pay a little bit better valuation.